Today on Forbes, former NFT specialist OpenSea is remaking itself into a crypto trading aggregator. As crypto receives a warm embrace in Washington and token prices rise to new levels, some once hot digital asset sectors like NFTs continue to languish. Few firms have suffered the brunt of NFTs' collapse more than NFT specialist OpenSea. Starting in mid-2022, the market for digital art represented by these unique, non-fungible tokens, or NFTs, from CryptoPunks to Bored Apes, experienced a spectacular fall, declining by more than 80%. By October 2023, OpenSea, the once dominant venue for buying and selling NFTs, was bringing in just $3 million in monthly revenue, down from a peak of $125 million in January 2022. The same month, the startup was valued at $13.3 billion, briefly giving its co-founders ownership stakes worth more than $2 billion. It wasn't just that people had lost interest in NFTs. OpenSea had also been abruptly overtaken by an upstart competitor, Blur, which charged zero trading fees and didn't require buyers to pay royalties to NFT creators. When OpenSea responded by loosening its own royalty policy, it drew the ire of its customers on Twitter, who said everything from, quote, "you people are foul," to characterizing it as, quote, "evil," and, quote, "a joke of a company." As OpenSea was hemorrhaging cash and struggling for market share, co-founder and CEO Devin Finzer held a company meeting for 175 staffers on payroll. He told employees that the company needed a reset and that he would be firing more than half of them. His goal, to emerge again as a smaller, nimbler startup where every remaining employee was enthusiastic about reinventing the company. Finzer offered severance packages to anyone who hadn't been laid off, but also wanted out. Today, looking downward, voice groggy, likely from his 7-day-a-week work schedule, he says, quote, "What was really tough was that a lot more people than I expected, some really good people, took that package." CEO Finzer now operates often from a WeWork-like co-working space in downtown Manhattan. About 6 other New York area employees are office regulars, but nearly all of OpenSea's 60 employees and 10 contractors today work remotely. After trudging through a 3-year bear market for digital art NFTs that may never bounce back, OpenSea is pivoting hard. Taking advantage of its customer base, which had swelled to millions of monthly website visitors, the battle-worn startup has expanded from NFTs to become a one-stop shop for trading all cryptocurrencies across 22 different blockchains. This shift means OpenSea can cash in on the meme coin craze, too. Finzer, who is 34 years old, credits his wife Yuchi Lira Kuo with having the idea to turn OpenSea into a trade-any-crypto application. Kuo is an early cryptocurrency investor who pursued a PhD in philosophy and politics at Princeton, earned a Harvard Law degree, and in 2016 began running a crypto trading fund. In 2021, Kuo left the trading fund and met Finzer later that year. Finzer says, quote, "I really consider her a silent co-founder of OpenSea 2.0. OpenSea's new focus is already showing real traction. In the first 2 weeks of October 2025, it facilitated $1.6 billion in cryptocurrency trades and $230 million in NFT transactions, up from $142 million in total volume in all of May. The surge will make October 2025 its biggest month in over 3 years. Under OpenSea's new game plan, it aggregates buy and sell orders from decentralized crypto exchanges like Uniswap and Meteora. In terms of fees, OpenSea takes about 0.9% for every transaction, accounting for $16 million in revenue over the first 2 weeks of October. Finzer's new focus for OpenSea is occurring as the soaring price of Bitcoin makes headlines, crypto goes mainstream, and prediction markets gain in popularity. Even though slumping market values for NFTs like the Bored Ape Yacht Club, whose average floor price has fallen from around $400,000 at its peak to $32,000 today, have burned many investors, a new crop of speculators remains undeterred. For the past 2 years, meme coins have been the industry's biggest obsession. Finzer says, quote, "You can't fight the macro trend. So," he adds, "you might as well embrace it." For full coverage, check out Jeff Coughlin's piece on forbes.com. This is Kieran Meadows from Forbes. Thanks for tuning in.